Good afternoon. So my name is Andrew McLachlan. I'm from Develop Hotels. So I provide hotel development management services through the full life cycle of hotel, from an idea all the way through to the hotel opening. We've got quite an exciting set of panelists that come from three very different backgrounds, but all actually physically investing in hospitality in Africa. So it's not pipelines, it's not intentions, it's actual investments into Africa. Just as a quick introduction, I'll go through the panelists. So Jonathan first, just a quick introduction, if you can tell the audience in 2 minutes a little bit about Jonathan Jackson, the Lordship Group, and then we'll dive into what you're doing here.
Great, thank you very much, Andrew. So I'm the chairman of Lordship Africa development group here in Kenya. I'm Kenyan and British, born and brought up here. And we are developing 88 Nairobi, which is the tallest high-end residential building in Africa, which will be owner-occupied, but predominantly service apartments.
Great. And Laura, if you can give a quick introduction to yourself.
Yeah, thank you, Andrew, and thank you, the bench and FHS for such an amazing event. So my name is Laura Gasca. I'm a senior project specialist at UN Tourism, the United Nations organization specialized on promoting tourism. And yeah, I'm very happy to be here.
Great. And Suhail, if you can give a quick introduction on yourself and CHIC.
Thank you, Andrew. Good afternoon, everyone. My name is Suhail Bhatia. I look after asset management operations at CHIC. We're a DRC-based hospitality investment company that's largely invested in assets in DRC, in strategic locations, with our partnership with Accor for 5 hotels. We currently operate 4 of them, 3 Novotels and an Ibis Styles. And we'll hopefully get the 5th one going soon. Thank you.
Great. So I'll stay with you. So obviously, you're more than just an investor. You're now an investor, owner, and operator, and in a frontier market. And you've got 4 hotels open. Can you just quickly sort of explain the structure from an ownership point of view? Because in a frontier market, you're having a relationship with the hotel manager with a core under a hotel management agreement. And the type of involvement that you as the owner still need to have is very different to operating a hotel in a mature market.
So if I understand correctly,
just
from our side, what we're doing?
From an ownership point of view.
Sure.
So just for the benefit of the audience, there's a lot of frontier owners here.
Absolutely. And I find this happening a lot more and more as more and more owners talk to us as well. What's important to understand is you can have a great brand, a great product. You can have great standards in place. We have a very strong partnership with Accor. But if the owner-side governance is not in place, you're going to have a lot of challenges. And I think that's what we've been successfully being able to set up is our own internal controls and use of relevant tools. I don't want to defer to AI. It becomes a buzzword for everyone. But really, we allow AI to do our work for us, not our thinking. So we are using certain tools to be able to really optimize the value of these assets, because in frontier markets, you're spending a lot on construction. You're spending a lot on talent pool. You're spending a lot on supply chain. How are you going to manage the returns? How are you going to justify to your partners, to your DFIs, to your banks that you are either lending from or you want more money from? You want to raise more debt. So if you don't have concrete controls in place from an owner side, the operator will do what they do. But if the owner is not doing his due diligence or his or her due diligence, you're going to struggle.
And you haven't thought of franchising on a franchise business because you've got to be so owner-centric and so on top of your business from a procurement line point of view,
Absolutely.
From dealing with local government who are stepping in and asking for things that your manager doesn't really want to get.
We're exploring opportunities to say, what's the right fit for the right brand, for the right market that we want to operate in? If it makes sense for franchise. I think we keep getting called out by the operators to say we're the only guys who are HMAs in a frontier market. But we're seeing the value of it. We're seeing that there's a great synergy, there's a great experience coming on, and I think accountability works both ways for us. So we understand franchise offers you so much more flexibility. We're absolutely open to it. There's nothing, we're not married to one particular idea or theme for that.
Jonathan, if we go to you and 88 Nairobi, this is going to be an absolute landmark in Nairobi, and currently going to be the tallest residential building on the African continent. Can you just give a sort of, how long have you been working on this project?
So we've been working on it for a very long time, and we've had, the project has evolved as we've gone through, and we've had usual delays, and even now we're having the delay with the war in Iran. It'd be with the surprising how that's affected shipping across the world, so we're even having effects on that as well. So yeah, so it is very difficult here to actually develop. I've been in development all my life. I've done 700,000 square meters of space in Europe, in my own development company there in Central Europe. But doing it here in Kenya has proved to be extremely hard. And particularly when we're trying to do, we are actually achieving European standards of quality. So that's what we're really aiming to do.
And just on that, you've been so successful in Eastern Europe.
Yeah.
What was the reason to come back to Nairobi, and why did you see an opportunity to? You wanted to be the market leader in the sort of branded apartments, serviced apartments sort of space. What was the rationale, sort of coming back to Nairobi and taking on such an ambitious project?
Well, the reason to come back to Nairobi was I was born here, and I see Kenya as my home. So I still have my main business in Europe. I arrived 2 o'clock this morning from Prague. So we're still very successful there in Europe. But being here, I wanted to show that here in Africa we can actually build to the same standard as Europe in Africa. It's proving to be a real challenge. We are getting there. Those who do actually come around and see it, they say they've not seen this quality anywhere in Africa, well, maybe in South Africa or maybe Egypt, but in Central Africa. So we are really putting a lot of effort and time to get the high quality. Why did we go for this product? We started off doing residential apartments, which have gone into serviced apartments. A lot of the buyers are wanting to rent them out as serviced apartments. And we then, last year even, we were considering going with a hotel group, and we spent a lot of time talking to different hotel groups, but we had actually gone far too down the line. Our back of house, our setup wasn't proper. Even though we built it like a 5-star hotel, it has all the amenities of a 5-star hotel. We don't have the back of house to suit it. And one of the interesting things that I've not really done hotel projects before, but we're doing one actually in Central Europe just now, is that you spend hotel operators, you know, and a lot of them are here. They want to sign an LOI very quickly, and the LOI is about 4 pages, 5 pages long, and you start saying, well, what does this clause actually mean? And they say, oh, don't worry, we'll agree that in the main agreement, and you call it the HMA. And you know, my lawyers are telling me, because I'm using lawyers from Dubai, they say, no, you must make sure you understand exactly what that clause means before you actually sign the LOI. But the pressure is always, you know, no, we'll sign the LOI, we're not going to invest in it, we're not going to put any time into this until we sign the LOI, then we'll put the time into it. And actually, it scared me off, to be honest. So I actually got scared off going into doing changing it into a hotel, because it would have involved a lot of money, a lot of changes, because I didn't actually fully understand what that LOI meant. I was being told, oh, we'll sort it out later in the HMI. But by that time, I've already signed the LOI, I'm committed, and you know, that really worried me.
Sure. So, Laura, just you invest, but you invest from a public point of view, and I think there's probably a lot of people in the audience who don't really understand what UN Tourism does and how it actually can help precincts destinations, and overall hospitality and tourism. Can you just give a quick sort of sense, just
Yeah.
so after this, people meet you, want to engage with you, and understand what structure you can actually assist in investing in hotels?
Of course, I mean, we are, as I said, a UN agency, and that makes me a little bit of a black sheep here in the panel because I'm closer to the public sector, but our role is very key because we are building a bridge between the public sector and private sector when it comes to tourism investments, and many of you would agree that there is a very different language and very different priorities when it comes to each side. So definitely there is a lot of learning opportunities, particularly for governments, to understand what is really looking for an investor into a project and how to prepare better projects for that investment to arrive. So we do that through technical advisory, exchanges, intelligence, report creation, insights. So we do it through different mechanisms, including, of course, being here in the room and understanding the trends and insights of private investors.
Great. So if we talk about you've got four trading hotels open, built in a frontier market, difficult and complex to build. Just from a capital stack point of view, how did you guys fund the opportunities? As owners, it's a DRC-based company, but from a debt structuring point of view, and from other shareholders, how is the portfolio financed?
Sorry, I'm not able to hear you well, but you mean how are we funding? Or,
Yeah.
or what we do decide before we fund?
No. How did you actually fund the projects? How were they actually funded from a funding point? Yeah.
It is a mix of equity and debt, like in most cases, but I would have probably favored personally a better ratio. We're equity heavy funded, largely, but we'd obviously want to work on more debt.
So it's not. So you don't have DFI funding in there. Or
We've got local banks supporting
Just some
us
local
with,
banks.
yeah, with like I said, the debt ratio could be much better, like when they had started the plans.
Okay. And Jonathan, your funding structure is completely different. And maybe you can explain to the audience how 88 is actually funded in essence for people that actually aren't familiar with the structure of the development.
So, funding is, you hear about it everywhere. Funding is really difficult across Africa, particularly now here in Kenya too. I think the debt we have is 20% debt on the total cost of the project. It's about 6% of value of the project. And so the rest of the funding has been done a mixture of our own equity and sale income.
Yeah. So it's sales of the unit to an individual owner. It goes into a rental pool, and that sale is actually driving the equity that's coming into driving the development cost.
Which has actually proved to be, on one side, good, but on the other side, we're finding that certainly here in Nairobi is that, and it's just a point of for other people here too, if you're thinking of doing the same thing, I'm finding you can't rely on those buyers. They sign out contracts, they sign commitments, but they don't follow through. So it does create difficulties in your cash flow. It means I have to put in more of my own equity into it. So it's not, you think, okay, we've got all of these sales in, I can plan it, but we find so many people don't follow through on their commitments.
No, it's fascinating because I've seen sort of the global growth of obviously service departments or sort of sectional title or condo hotels, and each jurisdiction is quite different on how they fund these projects. If we take South African example, I'm working on a couple of projects there. There, the developers are able to sort of get development funding from banks on the commitment of a purchase. So there'll be a purchase agreement signed. The unit holder only needs to initially put in maybe 10% cash, and the rest is actually bank financed. And so you as the developer upfront start off with a 100% funded project. You don't need to, well, it sounds like you here are actually every quarter having to draw money in to...
Here it's very different because you don't have, here you sell, the developer gets use of the money immediately. So that means a lot of Kenyan investors here have had bad experiences. So they generally don't want to invest. Even though we have sold now 50% of 330 apartments, we're over 50% sold. You do find it very difficult to, and for funding, to get bank funding at the beginning, they always say, well, you've got to get 20, 30% sold before we'll even give you the money. And you're not going to get that until you've actually committed and actually built. So it is a difficult structure here to do it. It is complicated.
And Laura, just if we look at sort of you working globally with your in tourism fund, is Africa having to fight for a little bit of attention to get access to some of this pre-feasibility sort of funding that you're actually able to deploy? Where's Africa sort of sitting on sort of the map sort of globally? Because when we chatted beforehand, you're investing in Costa Rica, you're investing all over the place.
Yeah, well, it's a very important question. And for context, of course, we all know that foreign direct investment, not only in the tourism sector, but across all sectors, is facing a constraint. Probably 2026 had a forecast of around 2.6% increase. And right now, with the geopolitical tensions and the conflicts going on, probably it's going to be even worse. So definitely there is limited capital, and Africa is part of the equation in that sense. So right now, investors, from our perspective, are looking a lot more on strengthening the current portfolios and the current pipelines rather than getting to new destinations. This means different things for Africa, but a very important part of it is that we are not seeing that Africa is is increasing its share in the global panorama, particularly with greenfield investments, so with new projects. So I was looking actually at the statistics, and for the past 10 years, the share that Africa has had is around 6-7% with not a lot change.
Yes.
So there are, as we've been discussing with other panels, there are some constraints, some structural things that have to be looked upon, and this is where a global view is interesting. So we can really take some examples of what's working in a country or in a region, and then we can get the best practices to the country more from the government side. What is it that the government is not doing at their best to attract the best possible tourism investments and to give that full potential to the region that we all know it has? Just another important statistic there is that Africa has 81 million arrivals in 2025, for example, but that still only represents the 5% of the world arrivals and the 2% of tourism receipts. So the consumption is still very low. So I know very well that coming from the UN, I should be more optimistic, but there is evidence that there is a lot to be done to fully unlock all the potential that we've been talking about here. So definitely Africa is trying to compete for that capital, and with many circumstances that can play in favor of it or against.
Yeah. So just for somebody else sort of coming into a frontier market, what are you seeing? Because where they're going wrong from a hotel development point of view, what do you typically see as a common mistake in the DRC? You're not the only guys developing the DRC. There's quite a lot of activity with additional hotels being planned or under development. You standing back as an owner-operator, what do you see guys really going down the wrong road, and you can already anticipate that they're going to struggle?
Well, I can speak from my lens for frontier markets and emerging markets, and I think the opportunity lies with, and people keep saying it on the stage and on multiple times through the day. I've been hearing in the past years as well, getting the right expertise, the right operator, the right partner. All that is great, but at the end of it, it's the investor's money. If you don't have an execution plan in place, you don't have governance in place, and you don't have controls in place, it's You expect the operator to solve the problem, they're not going to solve the problem. It's your problem at the end of it. So when you're planning, and the execution is the story. The growth remains, but the execution is the story. Sorry, I just noticed my overtime. Thank you for your patience. Thank you.
Jonathan, one question. You've got the first 88 Nairobi scheduled to open this year. You and I have had conversations in the past. You've got ambitions to do more 88s. What are the lessons you've learned from, let's call it Project 1, or it's like an iPhone. We're going to go into iPhone 1, iPhone 2, iPhone 3.
Yeah,
what are the lessons you've learned from this that you're going to take into Project 2?
You learn so much on everyone, and so there's a million things that you learn from it. I think making sure you got your financing sorted out up front is really important, and not rely totally on sales, and to actually get. I've had to take a lot of my equity from Europe to here to finish the project, which is okay, but it's delayed my projects in Europe. But this is, I think financing is, and it was mentioned earlier, is really, really important. I think in terms of projects, I think also the key thing also is to make sure it was a key thing when talking to hotel operators is having the buyers who are going to rent, want to buy units for investment, to keep them segregated from those who actually want to live there. And that was a mistake I made. I have them all mixed up in the building. So I think actually segregating those who want to buy for investment on certain floors and those who want to buy to live on other floors.
Great. Have we got time? Or, yeah. 1 minute.